Hello, folks. This is Steve Memory from Iconic Wealth Management with an educational economic update for October 2019. In this month's video, I'll discuss some of the major headlines that influenced markets in September, a bit about third quarter performance, and a view from the trenches in the trade war. I'll also provide insight into what these developments could mean for you as an investor. So please stay tuned at the end of the video for a required disclosure statement. Now, we just completed the third quarter of 2019 and are now entering the year's final stretch. For the year, through the end of September, the Dow is up 15%, the Nasdaq is up 19.7%, and the S&P 500 is up 18%. That's the good news. The bad news is that all three indexes are down from their July highs by more than 2%. And in the case of the Nasdaq, by almost 5%. Now, historically speaking, this is not surprising. August is typically a weak month for stock performance. In fact, the only month worse than August on average is September. This year, however, September gave us a bit of a reprieve, with the Dow and the S&P 500 gaining more than 0.5% and the Nasdaq moving up about 0.75%. The end result is the S&P had its best first 3 quarters since 1997. Now, I don't need to remind you that we were in a similar position last year. The fourth quarter of 2018 gave us a sell-off that lasted into late December, wiping out gains and giving us negative returns for the year. So will we see a repeat in 2019? Well, to make any prediction, we need to look at the economic fundamentals, where our biggest concern is the potential for slowing growth or even recession as a result of the trade war between U.S. and China. Now, in spite of an occasional rumor about progress with the trade talks, the U.S. and China seem fully engaged in trench trade warfare as they exchange volleys across no man's land. In September, the U.S. increased tariffs on another $125 billion worth of Chinese imports. China responded by issuing tariffs on an additional $75 billion worth of U.S. goods. The United States might institute further tariffs in December, bringing the total value of Chinese goods subject to tariffs to over $500 billion and covering almost all Chinese imports. China's retaliation is expected to cover 69% of its imports from the United States. If all the threatened hikes are put in place, the average tariff rate on U.S. imports of Chinese goods will be about 24%. 2 years ago, it stood at about 3%. The Chinese tariff on U.S. goods will be at nearly 26%, compared with China's average tariff rate of 6.7% for all other countries. Now, added to the trade uncertainty are weaker than expected readings in several regional U.S. manufacturing surveys, followed by similar reports out of Europe. ISM data showed that the Purchasing Managers' Index in August fell to 49.1%. Early October data added to the disappointment, and analysts responded by lowering third quarter GDP growth forecasts to 1.5%. That's down from 1.6%. Now, against that news, consider a recent analysis by Federal Reserve economists estimates that the impact of the trade war could reduce U.S. real GDP growth by 1%. That's significant. Little better news, though. On the jobs front, non-farm payrolls rose by 136,000 in September. Now, while it was short of the forecasted 145,000, it further reduced the unemployment rate to 3.5%. Now, the last time unemployment was this low was in December of 1969. In fact, this is only the 10th month since 1970 that the unemployment rate has been recorded below 4%. 5 of those months occurred in 2018. A strong labor market usually translates into higher wages, and this seems to be giving the economy a boost. Retail sales have remained strong and are expected to remain so. The result is an upward trend in GDP, which suggests a recession is still not an immediate concern. This is despite the inverted yield curve. What then does all this mean for the stock market? Well, currently the S&P 500 is just 4.6% below its all-time high. Our expectation is that it will test those highs before year end. If by some miracle we can remove the trade war albatross from our necks, we could see even greater returns. But that's it for this month's Educational Economic Update. Once again, this is Steve Memory with Iconic Wealth Management, signing off for the month of October 2019. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call. 703-891-9518. We'd be happy to talk with you.